Hello, my name is Peter Lusk. Thank you very much for taking the time to watch our Acanto Firm Overview, a dynamic approach to investing for all market conditions as of the end of second quarter 2022. Please feel free to pause, fast forward, or rewind this 11-minute video as your time allows, and I look forward to continuing the conversation in person. What is Acanto? Acanto LLC is a registered investment advisor specializing in evidence-based investing with the primary goal of protecting and growing our clients' wealth in all market conditions to achieve their financial goals. We use adaptive, rules-based investment models to balance your household's risk capacity with your individual risk preference, allowing your portfolio to adapt to changing market conditions versus a fixed allocation strategy. Our robust models adjust to current market trends and volatility across multiple asset classes and individual stocks in order to maximize your risk-adjusted return and attempt to minimize large and long drawdowns. Acanto LLC has over 70 years of combined experience in investments and pioneering research. We are passionate about the science of investing while protecting and growing your family's wealth in a rapidly changing world. So how do our models work? We use momentum to buy winners and sell losers, as illustrated on the graphic on the right. We apply the concept of momentum to buy a limited number of equities within the major indexes, as well as various ETFs across multiple asset classes, including stocks, bonds, commodities, real estate, gold, etc. We then balance risk across a portfolio's holdings by using risk parity. We use risk parity to balance risk across a portfolio by weighting each holding based on its unique downside volatility and how it behaves relative to other holdings within the current portfolio. In other words, the market determines what to buy and sell. This controls emotion and fear by following logical rules that are robust across markets, thoroughly back-tested, and are proven to work in real time. We then combine strategies to match your risk capacity. As you can see on the chart on the left, I have an example of two strategies, A and B. A selects 8 positions of broad multi-asset classes in the form of ETFs such as stocks, bonds, gold, commodities, certain types of REITs, etc. And strategy B, which uses the same math, similar parameters, but selects equities only, stocks, from the major indices such as the QQQ, the NASDAQ 100, and the S&P 500. But when we combine strategies, we can adjust the risk tolerance to match your risk capacity. And as you can see here, often when we combine strategies, we get a better risk-adjusted return than any individual strategy on its own. So a 50% allocation of A and a 50% allocation of B has an even better risk-adjusted profile than strategy A or B individually, as shown above here when you look at Sharpe and Sortino ratio, which is a measure of return versus how much downside risk you're taking. So to continue with the prior example here at the top of the page, we have the adaptive strategies A and B, one being multi-asset and the other equity only. As you can see, they have extremely attractive risk-reward ratios because their compound annual growth rate is almost the same as their maximum drawdown. So we can then blend those two strategies as shown on the prior page, but in a more conservative and a more aggressive manner where we would blend the multi-asset and the equity in different proportions, showing again very attractive and even higher Sortino ratios and that suit our clients' emotional risk tolerance and their financial risk capacity. To drill down into the single strategies on the S&P 500 and the NASDAQ top 5, where the equity top 10 comes from, you can see that they have extremely high returns with relatively high drawdowns compared to the other strategies, but very acceptable and a very high Sortino and Sharpe ratio compared to the S&P 500 and the NASDAQ, which in this is only going back to 2008 and much worse return profile and hence a worse Sortino ratio. And in comparison, you can see the Vanguard Balance 60-40 equities to bonds index having mediocre Sortino ratio but very high drawdowns for not much gain compared to the other strategies that are available. Why Acanto's methodology works. I'll let others do the talking. Momentum is present in U.S. markets and has been shown to be robust out of sample in the individual stocks for stock markets and for completely different asset classes such as bond markets, currencies, commodities, and others. It has become one of the preeminent empirical regularities studied by academics and practitioners. Risk parity offers a new way to engineer better risk-return trade-offs, better manage downside risk, and take advantage of traditional asset classes in a non-traditional way. By reducing the risk concentration away from any single asset class, both the level and consistency of returns should improve. Strategies that buy past winners and sell past losers realize significant abnormal returns. We have found this to be the case. I'd like to walk you through Acanto's client experience and process. The client experience. First, the client takes the risk capacity profile. We then set investment goals. We review your current portfolio, propose alternative portfolios if necessary, review new portfolios' risk scores, and then implement those new portfolios. We rebalance monthly and review your portfolio with you quarterly or anytime, and we adjust your portfolio as needed or as your position changes. We research and develop investment strategies that are rigorously backtested and proven over time to achieve our clients' goals of downside protection and upside capture. We use institutional investment methods, including risk parity and momentum, to allow client portfolios to adjust to changing market conditions. Each strategy we develop is robust and exhibits significant alpha on its own. We combine multiple non-correlating strategies to produce portfolios that match our clients' risk capacity and their risk preference. So who is Acanto? My name is Peter Luss Jr. and I'm the co-founder and portfolio manager and main strategy developer for the firm. I have 30+ years of asset management experience developing systematic, quantitative, and fundamental methods. I've worked for and advised hedge funds, futures clearing merchants, broker-dealers, and RIAs, including Forsman Leff, Refco, Jefferies, Ecovest Advisors, and about a dozen others. I have an MBA from Columbia University, I'm a chartered market technician, and I have a Master's of Architecture from Tulane University. My partner and co-founder, Diego Rivas, is Director of Operations and Business Development. He has 15+ years of systems development, brokerage, and hedge fund experience. He's established and managed multiple introducing brokers, commodity trading advisors, hedge funds, listed notes, and RIAs. James Mitchell is a certified financial analyst, managing director of research and development. James has 10+ years of quantitative investment management and product development experience. He's worked at Deutsche Bank, Natixis Global, and he has an MBA from UCLA. He has a Bachelor of Science from George Washington University, and his expertise is in statistical analysis and fundamental modeling. His skills include Python, C++, R, etc. Facundo Rawson is a managing director and investment advisor for the firm. He has 25+ years of experience in asset management, insurance, and investment banking. He has an MBA from the Hult International Business School at Boston College, and he focuses primarily on the Latin American markets. Professor Hans von Mettenheim is Director of Research. He has 20+ years of developing quantitative systems with over 50 published papers. He teaches at the PAG Business School in Paris, France, and he is a founder of Kinum Investments in Paris. Finally, I'd like to describe how Acanto works with our clients. First, a client completes the risk capacity questionnaire via our website at Acanto LLC so we can assess their family's financial situation and preferences. Acanto then reviews the client's risk profile and discusses investment goals, risk capacity, and risk preferences with them. Acanto crafts a risk-free analysis on the prospective client's current holdings to see if the client's holdings are aligned with their risk capacity and their risk preference. Acanto shows current holdings versus the proposed strategy mix to the client. Client opens a Schwab account and/or adds Acanto LLC as their investment advisor. Client funds the account or transfer of holdings, otherwise known as an ACAT transfer form. Acanto implements the strategy on behalf of the client. The portfolio is reviewed quarterly and adjusted if your risk capacity or risk preference changes. Now for the risk disclaimer. This document is distributed by Acanto LLC for information and research purposes only and has no contractual value. Information contained here has been obtained from sources believed to be reliable but not guaranteed. All investments involve risk, and past performance, hypothetical or otherwise, is no indication of future performance. All assets or portfolio returns shown within the presentation are purely hypothetical and used to describe investment modeling and methodology only. All charts, returns, historical research, and backtesting are shown gross of fees. Fees can vary depending on account size and strategies deployed by the client. No returns herein reference any actual audited or unaudited track record. Actual client accounts may differ in performance to one or more model strategies due to a number of reasons, including but not limited to slippage, commissions, required cash balances, account size, margin rates, if any, additions, withdrawals, risk capacity, non-discretionary holdings, capital gains taxes, R&D, etc., etc., etc. Please pause this video and read the rest of this disclaimer, and I will see you on the next page. Thank you for reviewing this presentation, and if you'd like to contact us, please go to our website at www.acantollc.com, or you can call us at 914-714-0735, or shoot us an email at info@acantollc.com. Thank you again for looking at this presentation, and I look forward to speaking with you in the future.